Armageddon crisis that I think has harmed so many of the operators. Our Canadian platform, as I mentioned, is mostly focused on exporting to the German market. And I'm just going to reemphasize here, we do have one of 11 GMP facilities. So our platform right now is effectively the beginnings of a multi-state operator with limited operations in highly populated markets. We have a hemp-derived CBD branding and distribution company. We have a drug development and research platform. And we have a Canadian licensed producer that is right now not cultivation oriented, but focused on scaled production of the Cannabis 2.0 products. So in Toronto, there's been the very limited products, but in our facility, we have the ability to jar and pre-roll very high quantities and act as a scaled manufacturer. So we are able to source API in the market and have scaled manufacturing in a smaller footprint. Our cultivation is limited to really focus on the GMP market. And then in the Cannabis 2.0 market, we are positioned to have scaled manufacturing of the Cannabis 2.0 products. And we have unique products and form factors. So we have a vape device that has a really interesting form factor. And we additionally have some unique edibles. And we expect that based on the US portfolio and acquisitions we've made where we have technology, know-how, and formulations, those can be leveraged into the platform and the facility in Canada. But additionally, we have some local French chefs that are producing unique differentiated items in the space. So we have, I would think, namely teas, chocolate, and macaroons. Not all of them may be high volume products, but they should be high margin and defensible. So as an active consolidator in the US market, I'm gonna speak a little bit to this slide. So we've been focused on geographic expansion and diversification, and we have done that primarily through acquisition in the US. Sorry, I'm like having a hard time with this mic. So on the right-hand side, you'll see these are the acquisitions that we've closed since January of 2019. Arise Bioscience, which we think is a very meaningful sized CBD participant in the space right now. At the time we made the acquisition, they were doing around between 8 and 9 million in revenue. And I think that their run rate is in excess of double. And we acquired that business for $13 million, half stock and half cash. And it closed in January of 19. When we acquired that business, they were initially focused on distributing a third-party product. And since that acquisition, they've successfully formulated, developed, branded, and launched 2 products. So the team there is really good at identifying trends in the market, developing and launching a product, and getting it into doors. In California, we picked up the Apothecarium, which was a very, very complicated transaction. There haven't been a lot of, I think, acquisitions in California due to the difficulty in transferring licenses. But the thing that we liked about Apothecarium is we thought that it actually had a brand story. It was one of the longest participants in the San Francisco market. They have been seen as a good actor. They operated by the rules, and they had an excellent management team. And that team was really looking to join a platform that would enable them to grow into other parts of the country by leveraging their operating procedures, their retail approach, which is highly educationally focused, and then also being able to grow into other states and extend the brand identity. We also have a transaction in the works right now called State Flower. I would love to tell you that this was a clean acquisition. Unfortunately, it's not, because it's also in San Francisco. You cannot transfer cultivation licenses in San Francisco. So this transaction will take place over a period of time. And in this, we are expanding their footprint for cultivation. This is an ultra premium flower brand that is growing really rapidly, and it's sold in California as well as in Nevada. Alera is the most recent transaction that we closed. This happened with a relatively fast timeline. And it's a very exciting transaction for us because the management team here exemplifies so much of what we aspire TerrAscend to be across the entire organization. The group of people here had the mandate they won a Pennsylvania license, one of the 5 or 6 super licenses in the state, and they had the mandate to open that within a limited period of time. They hit the timing required. They were nominally or marginally over budget by, I think, $2 million, which I think is amazing when you look at the amount of capital that's been deployed in these markets. And the team there is operated by, the CEO is Greg Rocklin, and he's a former scrap metal executive. So he had started and built a scrap metal business, sold it, bought it back, sold it again, because he understands that things are it's very important to look at things in hundredths of a penny. And so his approach to managing the business is to eliminate waste, focus on profitability, and look at the market and anticipate how you can actually match the demand. This transaction is structured in such a way that we paid $25 million in stock and $25 million in cash at closing, and we will pay 1x revenue after 2019, and then we eventually have an earn-out later. So the price is variable right now, and where we locked this in was a minimum price of $125 million. And based at the time, I think, of the press release, their run rate was, I think, 42 million, 43 million in revenue. And that was with them serving 60 out of 62 dispensaries from a limited footprint. And we know that their cultivation footprint right now is being tripled. And then finally, in Nevada, we received state approval. And in Nevada, that location has one retail location and a cultivation location, which is underutilized and underdeveloped right now. But that's where the State Flower brand is being cultivated and distributed into the market. And then we also have an edibles kitchen, which is distributing the Valhalla product that we own. So for us, we think that our management team has shown over the last 15 months or so that we have expertise in acquiring businesses. And we have had an amazing and robust pipeline and done, I guess this says $250 million in cumulative value of transactions. And 4 of those signed or closed in the last 10 months. The team started basically in the New York office, where we sit with the chairman and largest investor, Jason Wild. So each of our acquisitions is viewed and discussed with our largest shareholder. So the conversation around returning shareholder value and making sure that we're focused on what the shareholder thinks is part of the daily dialogue and the culture and fabric of the team that has been built in New York. So our team now includes some former M&A bankers who are amazing. We have a really great brand, strategist that works in our team that's very, very good at identifying trends. I have also some people that have serious expertise in integration, accounting, quality of earnings, and fairness work. And so with that, we have internally the capability to go in and assess opportunities to decide if it's something worth pursuing. And then now, namely, we have the ability to integrate those opportunities. So I'm just going to spend a little bit of time giving you some of the flavor for what the portfolio companies are. This is Arise Bioscience. And so as I mentioned, on the left is their first brand, Funky Farms, which I guess I'm so old, the word funky is an interesting word to me, but this brand sells and people like it. So they have 50 SKUs. It has tinctures, vapes, and edibles, strong recognition with Gen X and young adults, and significant traction in convenience stores, smoke shops, and vape. And since we've acquired this company, I think it's amazing to watch the brand distribution and how it's exploded. From when I went into gas stations in the area and wouldn't see the brand, and now it's everywhere in between registers. The original hemp is the more nutraceutical-oriented formulation that I talked about. This has very, very broad appeal, and it is very focused on blending a nutraceutical product with CBD. This is discussed and marketed as a cannabinoid product, but it's also nutritionally formulated to deliver to consumers well-known nutraceutical products that they're used to consuming to help with sleep, anxiety, stress relief. I expect that this group will continue on the product development side, because watching their ability to gather data and look at the success of original hemp, we think that this opportunity is continuing to grow. The Apothecarium, the picture on this slide gives you a view to what the Apothecarium looks like. I think this is their Market Street location, which was named the best designed dispensary in the country by Architectural Digest. Right now, the group there is managing 3 retail locations And we're also in the process of developing another location in Berkeley, which is right off of the gates into the university. This group, when you look at the California and Nevada locations, their 2018 revenue was around 45 million US. So to us, this was an amazing opportunity to work with great people that had scaled into a difficult regulated market, had done it in a compliant way, had a very loyal customer base, and were focused on educating the consumer and being good stewards in their community. We also like the fact that they have the ability through these retail locations to look at the data and understand the consumer buying patterns. And I think their buyer is one of the most particular in the market. I was at Hall of Flowers walking, and when people knew that I had a relation or connection to Apothecarium, of the thousands of brands there, everyone is clamoring to get into the Apothecarium. And this brand, we think, is really representative of what we want to bring into the Pennsylvania market, into the New Jersey market, and into other markets that we operate. So this is Alera. Alera is in the Pennsylvania market. The Pennsylvania market population there is around 12 million. The medical conditions there have recently expanded. There is discussion, I think recently on the East Coast, a lot of the governors have been talking about opening up adult use and doing it in a strategic way. The market here is continuing to grow nicely. And we expect that if you look at the existing cultivation footprint that they have here, which is a style of greenhouse, there's an additional capacity being added on, which will be indoor double stacked, so it's a more efficient footprint. The plan for this business is that they are building the improvements and expansion with free cash flow from their business. Right now, they're cultivating over 170 strains. They have significant market share. They're in 60 out of 62 dispensaries. The management team is there. They are staying, and we are using them in New Jersey. And this is very, very accretive to us from a margin perspective, as this is a very profitable group, and it closed just recently in September of 2019. The dispensary that you see at the bottom right now is currently branded as Alera. This will be rebranded as Apothecarium, and we expect that this group will open 2 additional dispensaries, likely in the Philadelphia region, as soon as possible. They're working on real estate, which, as a lot of you know, is tricky. This acquisition, in addition to the cultivation experience and the scale, has developed some really great formulations that are also more pharmaceutically oriented, focused, and marketed. They have been very successful in developing high quality products for the medical consumer. And those products we anticipate bringing into other markets, specifically New Jersey when possible, and then potentially also discussing bringing those into Canada. So that's part of the thesis, I think, that a lot of us have talked about, is the ability to bring brands, formulations, know-how, and pollinate your portfolio companies. So New Jersey is a new market that we are entering right now. The New Jersey market, I think, has been a little slow to get out of the gate, but it seems like it's developing really, really nicely. And as there's all this discussion around the potential catalyst for adult use, what we like about this market is it's very similar to Pennsylvania. It has a high population, it has an existing medical program, and there's catalysts for growth. We were one of 6 new entities that were granted the right to have a vertically integrated operation. We've been working on developing the footprint there. This is a look at the 16-acre facility that will have up to 200,000 square feet of cultivation and processing. And right now the plan is for 80,000 in the initial phase, but I expect that will happen over time. We're not going to go up and put 80,000 square feet of cultivation up like that. But it's right now in process, and we're very far along. I think relative to the other 6 market participants, we're doing really well. And then in Phillipsburg, New Jersey, part of the application, we won in the northern region. We have the ability to open 3 dispensaries in the northern region. That's where population density is the highest. But it was really important for us, in the spirit of the Apothecarium, to look at getting patients access that didn't have access. So Phillipsburg is a place that I drive by when I'm taking my daughter to lacrosse tournaments on the East Coast. But it touches on, it allows you to reach a number of patients that right now don't have access. So this was important for us as a first step entering to the market to give new people access. But over time, I would expect the other 2 locations will be predominantly focused on heavier population dense areas. So when you look at what we've been doing since I joined the team and started working on U.S. acquisitions with our largest investor, Jason Wild, the management team, which is focused out of Toronto, we have helped grow the company substantially on a pro forma basis. So in the third quarter of 2018, we were doing 1.8 million, and that was our business effectively in Canada. The fourth quarter of last year, prior to adding the US footprint, there was 5 million. At the end of the first quarter, 2019, 14.6, so almost tripling. And then second quarter of 2019, a nice bump to 17.6. And you'll see if you look at the pro forma numbers, based on the acquisitions that we kind of just talked through, had we had those things on our books for the year, we would have ended on a quarterly basis for the second quarter at 42.2 million. So this is our fully diluted share count. And the reason I wanted to share this with you is because our capital structure may not be obvious to investors. And right now, I think it's really important that TerrAscend start talking to a broader community of investors. We have been really, really lucky to have the support of Jason Wild, who took a control stake in TerrAscend in January of last year. And he did that in conjunction with Canopy Rivers and Canopy Growth. So Jason had started investing in the cannabis space, primarily focused in Canada, I guess, a year earlier. And by way of background, just to give you guys the real quick and dirty information on him and why this is interesting to me, is that Jason was a pharmacist by trade, and he also really liked picking stocks. So he had started a fund with, I think, $80,000 and grew that over, I think, 20 years, maybe 15 years, and got that through public market acquisition of spec pharma stocks to around 50 million. He was really focused on the spec pharma space, and he developed this great network, and those people that he was connected to became leaders in the pharma space. But by participating in these early market companies, he was able to participate in this growth. He realized that his network was really powerful, and he was connecting people in a really meaningful way. And so to start capturing some of those synergies of those relationships, he decided to buy a drug company. So his fund, which is called JW Asset Management, acquired Arbor Pharmaceuticals. Arbor Pharmaceuticals he acquired for, I think, $2.5 million. He put $3 million into it. And 4 years later, he sold a third of it to KKR at a $1.12 billion valuation. So his shareholders that had participated with him along the way did really well. And around that time, he got a call from a banker that was talking about the Canadian cannabis market, and that the Canadian cannabis market was effectively, had a lot of parallels to the spec pharma space. And one of the driving premises and like the kind of the fabric and the ethos of Jason is that he wants to do well by doing good. And so his background in pharma was about treating patients. And so cannabis was a natural extension of this investment thesis, which was to do well by doing good and to put money into like a developing space that's helping patients. The cannabis market was opening as a medical market. The medical market was condition specific, where people were taking healthcare into their own hands and saying, I'm finding that this product is helpful with me improving my life. So for him, this was really in line with his pharmaceutical thesis. He went up to Canada and flew from west to east and ended up investing in, I think, a handful or two handfuls of portfolio companies. And as a result of those, through acquisition and kind of the rapid development in the Canadian market, he became one of the largest holders in companies like Canopy Rivers and Canopy Growth. And so similar to his background in the spec pharma space, his network then became something that, kind of led him to wanting to do Arbor 2.0, which was effectively became TerrAscend. So in January, I guess almost 2 years ago, he made an investment of 31 million into TerrAscend, and Canopy Rivers and Canopy Growth were his co-investors. Canopy Rivers and Canopy Growth are, huge participants in the Canadian market, and I think in the global market. And they are listed on exchanges that do not permit participation in the US market or plant touching market. So we have as our, kind of largest investor right now, Jason Wild. And then when we decided to pursue the US strategy, we developed specific shares that would allow Canopy Rivers and Canopy Growth to stay as investors in TerrAscend, but their interest shifted from an economic and voting position to a non-economic, non-voting position. But they kept their chip on the table. And so as a result, our shareholder base is, it started out from this core group of 3 investors, and it has stayed kind of in this smaller family. But now it's time to start broadening our discussion and talking to a broader investor base. So we've been very quiet and haven't talked to very many people because we sit with our largest shareholder, and we are kind of constantly in tune with his investment style and thesis. But the team now is on its, I would say it has legs of its own. We've developed over the last 18 months, and we're excited to be able to talk to, potentially new people and to bring them into the TerrAscend story. So I think that's it for me.
We do have just one question from the virtual investor conference audience. How will you utilize capital from the Canopy Rivers investment?
The capital from the Canopy Rivers investment is limited to being deployed in the Canadian or the hemp space. So nothing that is THC or restricted. So we have Arise Bioscience. There's a tremendous amount of growth that we anticipate being able to capture in the CBD market based on our head start in terms of distribution. And then in Canada, I think right now we're focused on the GMP market and the scaled manufacturing and kind of defensible positions that we have in Canada. So they will not be participating in the US market, but they are participating in the non-THC, non-US side of the business.
Great. Thank you, Heather. With one more question, we'll keep it quick.
So it was 45 million across the locations in Nevada and California, and the total market price at the time that we priced it, because it's a blend of stock and cash, was around 100. Because of the stock component, it was originally kind of mentally priced at like 100 million, but then at the time our stock had run up. So based on the fixed share count, it was 119 million nominally. We haven't yet finished on the Nevada piece, but so in my mind, it was like $100 million acquisition. But I think if you look at the press at the time of California, it kind of priced the whole thing at 119. Yes, yeah. And with that, what we want, there were other locations that were being developed in California. So there's catalyst to additional revenue in California. And then also in Nevada, there's kind of expectation that there may be additional growth in that platform. But it was really also the management team, the brand, 2 states, and one of those states having like limited oligopolistic conditions.
Thanks again. If people have further questions, of course, there'll be a networking session after the presentations. Next up, we have Bob Groesbeck, CEO of Planet 13.
I was going to say where.
Good afternoon. So let me talk a little bit about Planet 13. I'll obviously fast forward to the legal disclaimers. I'm sure you're all very interested in that. So let's talk a little bit about the retail side of this. And before I start my remarks, I want everybody to understand Planet 13 is an integrated operator. So lots of folks, when they hear about our company, hear about our flagship operation in Las Vegas, they associate us with just a retail play. And that's certainly not the case. And I'll walk you through the various components of the company. But I put a statistic up here that I think is very compelling. 74% of Americans prioritize experiences over products. You know, we hear every day in the trade journals about brick and mortar stores closing and about the death of retail, given the emergence of Amazon and some of the other online platforms. I can tell you, based upon that data point and based upon our operation, that is not the case in the retail cannabis sector. And it's important to understand that, you know, given the emergence of the industry, as operators, particularly at the retail level, we have to provide those experiences to our customers. If you're not making your facilities experiential, I think you're in the near term, you're going to be very, very dissatisfied with your returns. And we see that anecdotally month over month at the superstore. So, Planet 13, our flagship operation is in Las Vegas, Nevada, in a very robust, competitive market. And we've differentiated ourselves as an operator. Our model is considerably different than most of what you've heard today. We're not interested in acquiring licenses for the sake of acquiring licenses. We're certainly not interested in being in markets where there is not a robust tourism economy or a lot of households to help augment the operations. Little overview, Las Vegas. We'll talk about some of the numbers in more granular detail, but we've got close to 50 million visitors coming through every year with a little over close to 3.5 million permanent residents. So it's a nice mix for us. Our initial phase, construction of the superstore complex, we're housed in 112,000 square foot a former beer distributorship. Our first phase was about 40,000 feet, of which 16,200 is devoted to retail floor space. What we did, again, tying into that experiential component, and because we're in Las Vegas, because we're in a tourist market, we wanted to do something that was over the top, something that would make it a destination. And we think we've accomplished that in phase one, and now we just opened phase two, which I'll talk about momentarily. And then now we're starting to move forward into our phases 3, 4, and 5. But again, really 3 core concepts for our company. Great service, great facilities, great products. And you have to offer a variety of products. We typically carry about 50 brands with several hundred SKUs divided amongst those various brand categories. So I'm going to talk about this briefly. We'll get into the metrics a little bit, the numbers a little more detail shortly. But we opened just about a year ago. In 2 days, actually, it'll be our first anniversary. So when we started the store in November of 2018, when we opened it, our original projection was to do roughly 2,000 customers a day, paid customers, at full operation at about a $75 basket. As we'll see that we've eclipsed that considerably. But I think one of the interesting numbers for you to see here is that 100,000 plus visitors per month that are coming through the facility. So we know we are now a destination, and we're continuing to grow that number, and we think we'll see a considerable uptick as we move into the phase 2, which I'll talk about. I've been fortunate over the years to do a lot of real estate work, and I learned very early in my career that the old adage, location, 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 means everything, and especially so in the cannabis space. I tell my people all the time as we're looking at potential sites, you cannot fix a bad location. I don't care what you do. If people don't feel safe getting there or being there, or if you can get out easily or get to the facility easily, you will not get a repeat customer. So what we did, our original store was actually about 6.5 miles off of the strip. It was branded as Medicine. It was a great store. We learned a very valuable lesson the night we opened up. One is it was too small and it was too far from our tourist customer. So my partner, my co-CEO, Larry Shuffler, and I immediately decided that we needed to identify a site that could get us as close to the strip as possible. We found it. And one unique feature in Nevada is you cannot have MME uses in the strip corridor, which is the heart of Las Vegas, Clark County. So we got as close as you could possibly be, as indicated by the icon. And we're minutes from basically every mega resort on the strip, the South Strip. and we're one of the few operators in the entire space that has pedestrian access. So to kind of put things in perspective for you, we average now about 700 cab drops a day to our facility. It's unique. Again, it's given the proximity to the strip. So, you know, I hear people every day come in and pitch me on products and talk to us about marketing and their brand and how they're going to be national. I can tell you one thing. There is no national brand yet. There are lots of people talking about becoming national brands. Some will make it, most will not. And one thing we've discovered in the industry over the last several years is there's a huge variation in product consistency. We've had operators in the store that put product on the shelves. We've had them for 6 months, fantastic results. And then we detect a marked deterioration in the quality of the product or delivery vehicles or mechanisms. So we're very wary of that, but we also recognize that branding is important. The Planet 13 brand is important in addition to the brands that we're developing in-house. Consumers are looking to retail for direction. That's very important. And again, we have over 3,000 customers come through our facility every day. Most of the cannabis consumers through our facility, about 80% of our customers are non-Nevadans. They're either from somewhere in the US or international. They want direction. They want feedback. They want input from the bud tenders. And by virtue of that, we control the shelves. We control the advertising. And frankly, we determine what brands will win. That's just how it is, because it's that initial contact with the bud tender, and it's that training that we provided to our employees that allows them to communicate to the customer and to ultimately make that sale. Owning the shelves. Consumers look to our shelves. Just show of hands, how many people in the room have been to our facility? Oh, we'll see. The rest of you are missing out. You can get flights out 5 or 6 times a day, but you need to come and see the store, because I can sit here and talk to you about it all day long. It doesn't mean anything until you actually see it. But it's important to understand consumers look to us for guidance. They look to our shelves for product. If you go into a lot of dispensaries, you'll see that there's very little ability to actually look at product or variety. You're directed through a line, then to another line, and then you get a product and you check out. We want to create an experience. That's the whole model behind Planet 13, create the experience. And companies want to be on our shelves. We have huge demand. We're now getting paid slotting fees in our premium cases in excess of over $10,000 a month. Tyson Ranch, I put here on the slide, is a great example of a company that is trying to go national, that made great efforts in that respect by doing their national launch at our facility earlier this year. Tyson Ranch was really not well known. Everybody on the planet knows Mike Tyson, but his product line was virtually unknown. Mike did his national and international rollout in Las Vegas, got massive media coverage nationally and internationally, and quickly propelled to be the #3 pre-roll seller in Nevada. Very, very impressive statistic indeed. And again, if you want to play in Las Vegas and you want to sell through and you want that brand exposure, what better place to do it in the largest dispensary in the world? So it's an exciting time. So I'm going back to another chart, and I'll spend a little more time there. This kind of gives you a more detailed view of our progression over the last year. As we like to say, we're building momentum. When we opened the store, I think I mentioned at the outset, our original plan, we thought we'd do about $75 average ticket. Fast forward to September, we're just shy of $95 a ticket. And we're hovering now right at that 2,000 paid customers per day. Last month, we averaged about 3,300 customers a day through the facility. Again, that's important from a number of respects. One is that traffic coming through the facility represents other revenue opportunities. So in Las Vegas, for instance, like I said, we get about 700 cab drops a day. They're usually, the average is about 2.5 people per drop. But maybe one is buying on the retail floor space, the others are sitting out in the hall playing on their phone, or we're playing on their phone, until now. We've provided those amenities to capture that additional revenue. So phase 2, talk about that a bit. that just opened this month. The restaurant opened Friday before last, Rickety Cricket. It's an internationally recognized award-winning pizzeria. And what we do now, for that customer and a half that's sitting in the hall playing on their phone, we want them now playing in the restaurant, having a pizza, burger, beer, wine, or cocktail. We're the only dispensary of its kind in the world that has that service amenity. And that's what differentiates us, makes us different. We've got an adjacent event space now that we've been open all of about a week in the event space. It's already been booked twice. It's basically booked for the rest of the year. So we knew that would be a big draw. We knew that customers liked it. Anywhere from bachelorette parties to corporate events to marijuana launch events. It's a wonderful opportunity. The event space itself adjacent to the restaurant's about 2,000 feet. And we've got another 3,500 feet adjacent to that in the grand hallway where we can do private events. And we've had just, again, phenomenal response. So this phase 2 represents about a 26,000 square foot addition to our existing footprint. And what it does is it allows us now to add additional experiential components to the facility to drive traffic and keep people there. That's what this is all about. Now, if a customer wants to come in and use the express line, they can get in and out as early as 5 minutes. The average wait time per customer is about 10 minutes in total, depending on time of day. But the idea is to get you in and to get you to spend time in the facility. If you want to get in and out, we'll accommodate you. But again, the goal is to make this a cannabis experience. The production facility, 16,000 square feet of production, which represents about a 10-fold increase in our capacity from our initial facility, will now have a large portion, about 3,500 feet behind glass. So the customer can now watch through a very highly automated glass facility, by the way, where they can watch products being manufactured in front of them. And if they're intrigued by that, they can see the constituent products in that product run. They can actually place an order on that kiosk and pick it up in the dispensary as they leave the facility. So part of that, of course, is based upon catering to these now 50 million plus visitors coming into town. This slide gives you kind of an overview of where people are coming from. And again, we recently announced our next location in Southern California in the city of Santa Ana. We're going to build a superstore there. It won't be as large as the flagship operation in Vegas, but we have a 40,000 square foot envelope to build into with an additional 15,000 feet for an atrium concept that all I can tell you is just stay tuned. It's going to be over the top, like our Vegas facility, and it's going to be a destination in Southern California. And we're very fortunate in that we're in the hub of Orange County, in the city of Santa Ana, which is the only city in Orange County that to date has authorized marijuana sales, recreational dispensaries. And some total of 30 licenses were awarded. 28 are clustered in a certain area, and there are 2 over in the western part of the city, and we're one of them. Great proximity to major freeways, large arterials. Again, minutes away from the beach, minutes away from Disneyland, Knott's Berry Farm, South Coast Plaza. So the whole idea, again, is to replicate the Planet 13 concept in that market, again, at a somewhat smaller scale. So take a look at the balance sheet here for a minute. You're looking at the quarter ending June 30. What's interesting here is the growth rate from 18 to 20, as you can see, was sizable. We've got positive EBITDA. We're poised this year to execute on our build out in Southern California. We've fully funded phase 2. Had about $19 million on hand at that point. The interesting thing here is of that 136 million shares currently outstanding, about 61% of the company is controlled by insiders, namely me and my co-CEO, Larry Scheffler, and then one of our other founders, Chris Wren, who's our VP of production, has about 3 points as well. So, we're all committed to this company. We're committed to growing it. We know the markets have been challenging as of late. Indeed, very frustrating. I mean, I look at what we do every day, and frankly, I don't have any control over the markets, but I do have control over how we run our company. And looking at this year, I think we're we're on target to do between 65 and $70 million in sales. And that does not include anything allocated to the phase 2 operation, which we're opening. So I'm going to talk a bit about our executive staff, and then I'm going to walk you through some of the branding. Very knowledgeable team. In fact, I've got Dennis Logan here, our CFO. He's in the audience. So if, following my comments, if you want to talk to us in the hallway offline, happy to do it. Again, this is our executive staff, some of our board members, a pretty dynamic team. We've got an outstanding team of middle managers that execute our vision every day and have done a great job. You know, it's interesting, we got a lot of criticism initially for not moving out into other jurisdictions. You know, of course, that's the flavor of the day. You got to be an MSO and you got to have 1 million licenses. Again, I want to emphasize to everyone here, that's not our model. At the end of the day, we envision maybe 8 to 10 of these facilities throughout the country. And again, just to put things in perspective for you, Nevada, I think we're on target to do roughly 70 million in this fiscal year, 700 million rather, the state. We represent about 10% of the state's overall sales out of this one facility. And it didn't take us long to figure out that running a superstore, you have one licensing fee every year. Whereas if you're running multiple stores, you're paying, you know, anywhere from $30,000 to $50,000 a year just for your license right. Our concept is different. We're focused again on a grand scale operation. It's experiential. It's designed to get you to the facility, keep you there. So I want to talk a little bit about brands because again, I said at the outset, there are no national brands. There are some very strong brands that are coming into the market. And I think the Planet 13 brand from a storefront perspective will be national. But looking at a portfolio of products, you know, for instance, you know, I kind of told you early on that we kind of drive the brand, we drive the message, and some of you probably smirked at that, thought this guy's pretty damned aggressive and obnoxious. But that's the reality of it, and I'll tell you why. Here's a perfect example of how we can drive a brand. Trendy is one of our internally produced brands. We put that into the market last year, and immediately that became the #1 concentrate brand in the state of Nevada. It still is, and it's still one of the very top selling vapes. It's a disposal cartridge that tourists absolutely love and have to have. It's a 0.3 cartridge. There are some 0.5 runs, but it's something that the customers gravitated to. The tourist customer in particular loves it. Medicine. I mentioned earlier, medicine was originally a storefront, and it's morphed now into a product line. Our medicine strains, our medicine products, our pens, our flour, our concentrates are sold out as soon as they hit the store. And in fact, that's one of the issues we're going to have to deal with now. We've talked about working with other growers to perhaps grow the brands for us, but we're very concerned about losing control. And for our premium lines, we want to keep control of that. So we can control the obviously protect the strains, but control the product consistency. It's very important. And if you go into the facility and you ask for Chloe, for instance, my guess is most of the time it'll be out of stock. And because when we do release it to the market, it literally sells out in days. And to the earlier comment this afternoon, there were a number of mentions and questions from the audience about vaping and about all, you know, the impact to our business in the industry by virtue of what's happening federally. It's interestingly enough, we've not really seen an appreciable drop in vape sales to our facility. And we obviously monitor that very closely. We're concerned about what is happening nationally, but I think you are seeing now that out of the wires that most of the problems have been traced back to, it appears, to illegal processors and manufacturers. So obviously we're fortunate in Nevada, like every other state, we're required, every gram we sell through the facility is required to have third-party testing and sign-off. So another line that we put out last year, or early this year rather, Leaf and Vine. It's a premium cannabis concentrate. It's interesting how this product is developed. We find now that women seem to really gravitate toward this product more than men. And the more we produce it, the more they seem to like it. So we're really excited about where that's going. And again, now these products, some of them will be manufactured in front of customers. So they'll actually have an opportunity to see how cartridges are filled. And then Planet M, that is our CBD company. And it's we're building out the Planet M store that'll be open the latter part of this year, probably late December. And that is devoted solely to CBD and our CBD lines and others. The reason we're moving all the CBD products out of the main dispensary floor space is really twofold. One is to create a shopping opportunity for customers, maybe don't want to go into the THC floor to buy. They're looking just for a CBD product. But the other reason, the overarching reason, is 280E. For us in the industry, that is a very, very nasty term. And it's a very punitive provision of the tax code. We move all this out to a standalone store in this greater mall. Now we can take traditional deductibility. We can do things that we couldn't do in the THC space. Same with marketing and advertising. For us, that's a game changer. So that's it for the presentation, other than there are a couple slides here we didn't put on, and I don't know why they didn't get there, but behind that glass manufacturing facility, we just announced a new beverage line that's coming out. They're running cans today, I understand, fine-tuning it. That's Elysium Beverages. And the first round will be infused sparkling waters, flavored waters. Really excited about all the testing on that. The R&D on that was probably a little over a year. And we've had phenomenal feedback, so we're really looking forward to getting that into the market. And then our Ha Ha Gummies line is coming out. They laugh in every bite. And Dreamland Chocolates, our new chocolate run. The nice thing about this is the facility is very, very automated and robotic in some areas. So the robotic features will be tied into this that customers will like. There'll be a show. And so we're excited to provide that as part of this overall shopping experience and amenity. So, we're doing some unique things, and stay tuned. Like I said, we're going into California. That's our next rollout. But I can assure you that we're actively engaged in other markets that meet our metrics and our requirements, including Boston, Detroit, Chicago. We're taking a hard look at all of those markets. And again, when we make an announcement, we make a commitment, it'll be at a grand scale, similar to our flagship operation in Las Vegas. So with that, I'll conclude my remarks, and I'm happy to address any questions.
So we have a question from our online audience. Who or what is your biggest competition in Nevada?
We don't have any competition. Are you kidding me? I think our biggest competition really is the black market. And we've got some 43, 44 legal operators in the valley in Clark County. They're obviously competition, but they're catering more to the locals market. Again, as I said at the outset, 85% of our customers are tourists. So we're not getting cannibalized by the other operators. And one thing to keep in mind for you in the investment community, in Las Vegas, we had a little hiccup with that last round of licensing, but eventually, there will be an additional 40-some, 50-some licenses coming online in Vegas. So they're going to continue to fight for that 2.4 million customers that are there. So what does that typically do? Well, it compresses your pricing. And so for us, we think we're a bit immune from that, so, by virtue of the customer base we focus on. Sir.
Thanks, Bob.
So I spent some time with Larry last time I was out there. It's going back a few months, though. What are you guys planning to do with the club concept? There was some talk about having a, kind of more of that nightclub, dance club type of scene, maybe a pool.
Right.
How's that coming along? Are you guys getting permitted for something like that, or is it still a work in progress?
Well, it's an excellent question. I'd like to start building that tomorrow. Unfortunately, in the state of Nevada, the governor's office, through a piece of legislation in our last session, AB 533, imposed a study period for some 2 years to figure out how they're going to roll lounges out. We're ready to go. So the whole idea with this is to do a consumption lounge, which would be a more traditional lounge type environment, and then a true nightclub experience, as Larry indicated with the pools. There's not much we can do about that until we get the thumbs up from the governor's office with the legislature, but it will come, and we will build it, and it will be amazing. That I can assure you.
Very good. And a different subject, I'll finish up with this. for your beverages that are coming out, what kind of dosage are you putting into those?
0.5 grams. It'll be a low dose, more recreational, social. So it'll be a consistent quality, and we want to keep that consistency. And we think that based on our studies, that's probably the best dosage.
Time for one more question.
How have the land-based casinos reacted to 100,000 visitors each year going out to Planet 13, and how has that impacted the area kind of around your store?
Well, let's just say most of them have been fine. At the end of the day, it's all about driving traffic to Southern Nevada. Some have been, how should I say, not quite as supportive. Some have been actively opposed to the industry from day one. But, the fact is the voters spoke very clearly. Recreational marijuana is here, and it's here to stay. And I think now, I know a lot of operators in the space. Many of them are just looking for an opportunity to monetize it and make money off it as well. But in the meantime, as long as it's a Schedule I narcotic, I think the publicly traded companies will stay out of the space. Oh, we talk all the time. Yeah, we've got good relationships with a number of the groups. And again, our goal is, we want to bring people to the facility, buy product, and then we want to get them back to the hotel so they can spend money. One thing that's unique in Nevada that I should point out, we allow tourist customers, anyone 21 and over, to buy recreational marijuana products. We just don't give them a legal place to use it. And, that's an issue we want to solve with the clubs and the lounges. It's just unfortunate that it was one of the nuances in the statute that's created this bottleneck. Great. Thank you very much. Appreciate your time.
Planet 13, by the way, is up 10% at $1.97. Wow. They look good, man.
All right. Next up, we have Charlie Bachtell, CEO of Cresco Labs. Welcome, Charlie.
Thank you. Afternoon, everybody. Charlie Bachtell, co-founder and CEO of Cresco Labs. For those who aren't familiar, Cresco Labs is one of the larger U.S. operators. How are you? Quick disclaimer page. Started trading publicly on the CSE December 3rd of 2018. So coming up on a year with that experience, and continue to progress the development of highly regulated, compliance-focused cannabis from market to market. Started in Illinois, now present with operations in 11 states, with pending acquisitions included. So really the mission of Cresco Labs, vision and mission, is to be the most important company in the cannabis space. I think it's important to clarify what we mean by that. A lot of people will talk about being the largest or having the highest revenue or the most amount of states or the most amount of dispensaries. We've always looked at sort of our place in the industry is to really help normalize and professionalize it. And that means a lot of things. So as we talk about our vision and our mission and where we're headed with the organization, it's not necessarily to have the highest revenue or the most amount of states under our belt, but it is to play the role that we're supposed to play, which is helping to normalize and professionalize the cannabis space, which is the most important part of what any company should be thinking about doing at this point. A little bit about who we are, our background. So Cresco was started by myself and two co-founders. And the experience that we had in the banking space, particularly in mortgage banking, really created the foundation upon which we approach cannabis. For us, there are a ton of similarities in the experience that you can gain in being part of an industry, because we were specifically on the mortgage banking side. The experience that you can gain in being a part of an industry that goes from relatively unregulated to hyper-regulated overnight on a state-by-state basis. We were state chartered. So for us, Illinois was different than New York, was different than California, even back in the mortgage banking space. And also have to operate in a services industry that had a subject matter that had a tremendous amount of negative stigma, and what it was like to get people comfortable, potential consumers, customer base, to be comfortable in trusting you, in dealing with you, in working with you in any environment. So the experiences that we gained in the banking space really, I mean, if I tell you that cannabis is unregulated, hyper-regulated overnight on a state-by-state basis with a subject matter that has a tremendous amount of stigma, it rings true. So that's how we started the organization. That's the foundation upon which we built it. But, you know, a few things were obvious to us immediately when we looked at it through our lenses. One was that it was going on this progression from, to more regulated. Also that cannabis was a consumer packaged good, whether cannabis knew it at the time or not. This was not going to continue to be weighed out in front of you where you could squeeze it, where you could smell it, where they put it in a cellophane bag and you walk out the door with it. Illinois changed that, right? Illinois really did usher in Gen 2 of cannabis, which is highly regulated and compliance focused. And nothing can leave a cultivation or manufacturing facility in Illinois unless it is consumer packaged, child resistant, third-party tested, tamper evident, sealed, cased, and shipped. Right? That's consumer packaged goods. So it helped us sort of get an understanding of the way that we were going to approach the space. That, of course, meant we wanted to surround ourselves with subject matter experts from traditional industries. You know, as we're talking about normalizing and professionalizing the space, we firmly believe that there's nothing, there's no wheel that needs to be reinvented for the cannabis space. There are lessons to be learned from alcohol, from traditional CPG with food side, with pharma. The way that you not only produce, the way that you package, the way that you distribute, the way that you communicate with customer bases. Those industries have spent literally trillions of dollars over the last few generations in developing models that will be the successful models that the cannabis industry implements going forward. So a bit of a tale of the experience of our leadership team and the organizations that they came to us from. As far as Cresco Labs footprint, you know, our vision on how you grow in this company and our strategic path forward in creating national brands. People used to ask us all the time, how do you create national brands? If you think this is CPG, how do you create national brands in an industry that is on a state-by-state basis? And for us, the answer was always, well, you create the most strategic geographic footprint that you can, and then you have deep, meaningful material positions in each one of those markets. So if you can put together a footprint that exposes you and your products to the most amount of people in these marketplaces that are influential marketplaces, and that you are relevant, that you are a true participant in those markets, that you are a leader in those markets. That's how you create national brands in a state-by-state structured industry. As you can see on the map there, with our 11 states that are currently under the umbrella with pending acquisitions, you have 7 of the 10 most populated states in the US. The only 3 that we're missing don't have real cannabis programs. And then our other 4 states, you're talking about very strategic states. You're talking about Nevada, as Bob had mentioned, with Las Vegas and the importance of that marketplace. You're talking about Arizona, which is one of, if not the largest remaining medical markets. And it also has Phoenix, which is the 5th most populated city in the US. So you've got population density. You've got Massachusetts, that is the only real adult use program in the Northeast. So you have states of relevance. And then with execution history, you're with us in Illinois in the existing medical program, and we'll talk more about the very exciting adult use law that was passed and that program that's coming. But you're talking about 100% market penetration. Our products are on the shelves of every store, whether we own them or not, and 25+% market share, by far the highest market share of any operator in the state. The same is true in Pennsylvania from a market penetration standpoint, with a higher market share closer to 30. Ohio working on the same trends. As we go into Nevada with the pending acquisition that's in front of us, that is a top 3 market share operator in that state as it exists. Their assets in Arizona will put us in a top 5 market share position down there. The Florida acquisition, the 5th most number of dispensaries open from any operator currently in the state. So everything that we've done, from winning licenses in states that matter to M&A in states that matter, is with the goal of creating these meaningful material positions in each one of those markets. Our focus, I think we always get asked the question, sort of, what makes you and your peer set different from each other? And historically, three things really rang true. The background and the experience of management. It's hard to replicate the experience that you can get by being a part of the mortgage banking industry during the financial crisis, and not only surviving it, but truly thriving in that post-regulated environment. We scaled the company from 200 employees to 3,500 employees over the next 3 years, all 50 states, 150 plus brick and mortar offices. So that experience that you get in truly having your back against the wall as the majority of your industry is facing not only attrition, but surviving and thriving is unique. Execution, the ability to win licenses, it's tough to buy your way around the country, and it's also tough to win your way around the country. A lot of these states have already had their application processes. There are no more new licenses to win. So you've got to be able to do both. And getting M&A across the finish line in this space, as you are seeing, is challenging. Only the companies that can truly fight through the challenges that are thrown at you every day in this space are going to be the ones that are successful. But it's also been the focus on the elements and the verticals of the value chain. So if you want to be a top 3 operator in this space, one, you have to have a multi-state footprint. And to have an effective multi-state footprint, you better be proficient in all 4 verticals of the value chain. You need to be able to produce your own product. You need to have a brand or a house of brands of products. You need to be able to get those products onto other people's shelves that you don't own. And then you better also play in the brick and mortar retail space. Now, to us, we think the outside verticals are the 2 most easily disrupted. With the stroke of a pen and already in anticipation on where those go, you see significant dilution or disruption in cultivation and manufacturing as well as retail. And for a lot of people, the retail disruption isn't as obvious, but I can tell you the firsthand knowledge of it is exactly what we expected in Illinois. Illinois went from 55 retail licenses in our very, very controlled medical cannabis program. As we passed the adult use law in Illinois, the limit is now 500. On the supply side, we added effectively the same square footage that one more license could produce. So supply is controlled, brick and mortar retail becomes ubiquitous. For us, it's obvious that the vast majority of the revenue opportunity lies in having your products on every shelf in a state, as opposed to the 5 or 10 that a state is going to allow you to own going forward. Of course, every state is different. It is a state-by-state analysis, but that's why we prioritize the middle 2. We see it as having the highest upside opportunity and also the greatest downside risk mitigator by focusing on branded products and being able to get those products onto other people's shelves. Here's one of the reasons why we focus on products. Again, as we looked at this industry from the very beginning, from a CPG perspective, the brands, the actual brands that are on the shelf, we thought played 2 very important roles. Again, as our mission is to normalize and professionalize the cannabis space, having normalized and professional products on the shelf is critical. Arguably more critical than having a professional store to go into. If you go into a professional store and every product in there still looks like it was made at home or has a big pot leaf wrapped around it, that's not the way that you normalize an industry. That's not how you get the new consumer base to come into the space. They need products that look and feel normal and comfortable to them. It's also because of the margin play. I mean, as you can see here on the graph on the left, I'd rather be on the right side of it than on the left side of it. You can see from a graph or a chart that was prepared by Cowen in their review of the industry, we have definitely, while everybody is talking about brands now and that they want to be a brand company and that they focus on brands, I think you can see that Cresco on the right has always focused on brands, and we know that we are a product producing company that focuses on wholesale. We want to be on everybody else's shelf more than we want to own our own. We know that is the long range, normalized marketplace area to focus. So you have to have products, right? You have to have branded products. And for us, this again, was obvious to us coming online in Illinois. We knew we were going to have 2 different types of market segmentation exist immediately. We were going to have your traditional cannabis customer who's already okay with the subject matter, already okay with product. And then you're going to have a non-traditional cannabis customer who never has, nor did they think that they would ever consume cannabis. You have your 70-year-old grandmother who, again, never thought that she would consume cannabis, but her oncologist said it'll help with the nausea from chemo. 2 very different people who are going into the same store to effectively buy the same product, wanting it to look and feel totally different than the other. One group doesn't want to buy anything that looks like Pfizer made it. Your traditional cannabis customer, the culture that exists in your traditional cannabis customer who's already okay with the subject matter, does not want to buy anything that looks like Pfizer made it. On the other hand, your non-traditional cannabis customer, again, is sensitive to the stereotypes and playing to that lowest common denominator. So we created a brand called Remedy for the non-traditional cannabis customer, focused on the medicinal qualities, more akin to a Walgreens shopping experience. So we designed something that would look at home on the shelves of Walgreens. And the other key brand tenet here is non-combustible. So CBD dominant compared to THC in a ratio format, nothing that's combustible. So it's pills, it's tinctures, it's topical lotions, it's transdermal patches. Very easy to understand form factors, very comforting, always repeatable and consistent dosing available. So unlike your traditional cannabis forms, which is why we created Cresco. So Cresco, our namesake brand, was designed to be normal professional cannabis. This is the vision we had in our head back in 2013 when we said, how do you change this industry? Well, you make products look and feel normal, that they would look at home in Whole Foods right next to the craft beer, high-end coffee, or the wine section. So we created Cresco. Brand tenets here is this is combustible or vaporizable, and it is THC focused. So flower, concentrates, and vape pens sold under the Cresco line. Or that other segment that you start to see develop in more mature markets, the sophisticated, educated, traditional cannabis customer who is looking for the premium product line, we created Cresco's Reserve. Again, brand tenants here is that it's really quality control. It's unique genetics that aren't widely available, and also quality control. Truly only the tops of the tops are sold as flower. Everything else goes downstream for manufacturing. So premium product at a premium price point. This retails for about 50% more than the Cresco line of product. For an analogy, it's the Johnny Walker Blue Label to Cresco being Black Label. What we recognized is that as you develop a customer base, you want to have the answer for all of the occasions that they're looking for. You don't want them to outgrow you. So this was an extension of the Cresco line, the Reserve. And then of course we have edibles. So for us, this was kind of an obvious progression. You want to make a good edible product, work with a chef. Mindy Siegel is a James Beard Award-winning chef out of Chicago. Been on the Today Show, Martha Stewart. She's a judge on the Food Network all the time. Developed a line of edibles with her that really, again, elevated the status of edibles. Edibles have always been sort of the black eye on the industry. It's the accidental overconsumption. They taste terrible. They're wildly inconsistent in dosing. Again, this was a lot more true back in 2014 when we were developing this. The industry has gotten better about all of these aspects. But Mindy's was really the first sort of scientific approach to an edible that we'd seen in the space. The SOPs that are associated with making Mindy's edibles from a consistency and a dosing and a repeatability standpoint are exactly the same SOPs we use in our capsules and our tinctures. And then our most recent addition, Well-Beings. This is our hemp-derived CBD brand. Unlike some of our peers, we really look at the CBD opportunity as the most important marketing opportunity that a cannabis company can have. And so we wanted to create a brand opportunity that could be introduced to everybody in all 50 states, not only the states where they have licensed medical dispensaries and where you don't have as many restrictions with regard to advertising as you will in a state-to-state format on the THC side. So eventually we will have Well-Beings that contains THC that would be available throughout the THC cannabis marketplace, as well as we'll be doing hemp-derived CBD versions of our other brands that would be appropriate, like a Cresco, a Remedy, and even a Mindy's. Eventually will be available in hemp-derived CBD form. So again, accessible to the population in all 50 states. Also, this is I guess a test case, you could say, for our thesis that you prioritize the middle two verticals of the value chain, because I'm not going to grow 10,000 acres of hemp to source CBD, and I'm also not going to own one brick and mortar retail store where I'm going to sell these products out of. So solely focusing on the middle two verticals of the value chain, which is where we think the future of THC goes also. I think there's a video here, but might not work. So we'll go to this. Oh, this is our retail brand, Sunnyside. So, Sunnyside brand. Like I said, if you want to be a top 3 player in this space, you better be proficient in all 4 verticals, and that does currently include brick and mortar retail. So, very important from not only a standpoint of having the customer insights that are associated with being able to sell your own products to your customer base, but it also we use retail as a tool in our wholesale efforts. The reason that I have 100% market penetration in the markets that I'm in is because I have retail too. And there's a couple of misconceptions that I hear all the time in the investor and analyst community, which is that all of the vertically integrated MSOs, we own all of the dispensaries. That's not true at all. We own a small fraction of the total amount of dispensaries that are out there in the country today. And 2, that when we do own our own dispensaries, that we only sell our own products out of. There's only 1 state in the country where you have the forced vertical integration, where you only have 1 product brand when you go into a store, and that's Florida. It's a very antiquated model. And I think this is consistent in most of the MSOs. If you come into one of our stores, about 40% of the shelf space will be our products. 60% will be dedicated to the other brands that are available in the marketplace. And the rationale behind it is very simple. If you only sell your brands, your customers will go to other stores. The consumer experience that consumers are looking for today is the Best Buy model. It is not the Apple Store. They want variety. This is an experiential event for them. They want to come into a store and they want to see 3-4 different types of gummies. They don't just want Mindy's. They want to see flower, a variety of flower from a variety of different cultivators. They want to see different form factors. And even a company like Cresco that has over 500 SKUs and 500 different products and 5,000 different SKUs, we don't make everything. So you have to have the other brands. And as I said, we use it as a tool in our wholesale too. You can come into our stores and we carry GTI products. We will carry MedMen products. MedMen will carry our products. And that's the experience that you're seeing develop in the industry today, is a Best Buy experience at retail, not an Apple Store experience. Illinois, and I know I've got to wrap it up here pretty quick, but Illinois, super important. The adult use law that was passed in Illinois, the first time that a state has ever passed an adult use law through the legislature. So the first 10 states to do it was by ballot initiative or voter referendum. It is, talk about threading the needle. To get something as polarizing as cannabis through the legislature these days, with all of the stakeholders sitting at the table in a scenario where if any of the stakeholders, whether it's Republicans, Democrats, law enforcement, the Black Caucus, the Latino Caucus, the incumbent operators, the medical community, if any of them would have objected to the law that got crafted in Illinois, it wouldn't have passed. And so what that did is it, and it gave me a unique perspective, as I was a member of the governor's transition team, the only operator in the cannabis space to be on his transition team, to look at the way that cannabis is going to get through legislatures and have legislation get passed going forward. And we'll touch on this in a minute, but social equity. Social equity is the future. It's part of the future of the cannabis industry. And as I'm talking with a room full of investors and the investors that are watching on the webcast, I don't know that there will be another law passed in the U.S., an adult use law, that doesn't have a focus on the social equity aspect of cannabis. You can't go from having medical programs where you're talking and you're concerned about epilepsy to just having over the age of 21 be the restriction and sell adult use cannabis without addressing the disparate impact that the prior war on drugs had on different communities in your state or in your municipality. There's no way that you can have an equitable conversation unless this is part of it. So I would say to any of the investors, if you are looking at investing in a company, and honestly, this is where sort of the normalizing, professionalizing cannabis and our focus on making sure we're a big rising tide company. We know that the program has to be healthy in order for any of us to have fun competing against each other in the marketplace. but social equity is a focus of where this industry is going. For the Canadians in the room, right, it's skate to where the puck is going. For us publicly traded in Canada, I've heard that a lot over the last year, but it is very true. And it's an opportunity for investors to demand that of the organizations that they want to invest in. Because I'll tell you, if there's an organization out there that doesn't have a social equity plan at this point, they either have a giant blind spot on where this industry is headed, or they know it and they haven't acknowledged it and put the pieces in place yet to accommodate it. I don't think any of those, either two of those scenarios are good investment opportunities. Plus, I think this is an opportunity for the investor community to play an impact on where this is going. I can tell you that the progression that you're seeing develop in the industry as it relates today is all about having these normalized marketplaces. Social equity is a part of it. We are, quickly on Illinois, as the only operator with 3 cultivation licenses in the state. It's a pretty unique advantage now that you have a canopy cap. Licenses in Illinois are now capped at 210,000 square feet of canopy. So we're the only operator with 3 licenses. GTI has 2, everybody else has 1. So I can grow 630,000 square feet of canopy, GTI can grow 420, and everybody else is capped at 210. It's a pretty distinct advantage, especially in a marketplace that is going to be supply constrained for at least the next 2 to 3 years. On the dispensary side, as I mentioned, there will always be, like in Illinois, the cap now is going to be 500 dispensaries. They cap you, though. Each individual licensee is capped at 10. So nobody could have more than 10. In the medical program, it was 5. They allow all of us to double going into adult use. So we've had 5 dispensaries on the medical side. We'll have 10 on the retail side, on the adult use side. SEED, this is our social equity and educational development plan. And very quickly, we formalized it and put a name around it, but really Cresco Labs was founded back in 2013 with a focus on being a community project builder. That's how you win licenses in merit-based application processes. A lot of people don't realize that. There's a couple of companies that have experience, my peer set, that have built their businesses by winning these very competitive merit-based application processes. Us, GTI, Harvest. When you've done that, you know what it takes to win one of those very coveted, very rare limited licenses in these states. And it's dotting the I's and crossing the T's that they tell you about, right? They want to know about your cultivation plan, your security plan, your staffing plan, et cetera. But it's the other elements that they don't tell you about is how you win. And that's building community projects. That's having letters of recommendation from your mayor, from your county commissioner, from the chief of police, from the director of the school board, from your lot line neighbor, right? So putting together that holistic package of workforce development plans with internship programs with the local community college. That's how, again, you win these licenses. As we transitioned into an adult use focus, that definitely, as I mentioned, includes social equity, the community plan that you're building takes on a slightly different approach. And it really does. It makes you focus on, okay, now the point of this law, like the point of the law in Illinois, it led with social equity and it followed with tax and regulate. So the number one priority was making sure the communities in Illinois that had been most negatively impacted had a role in this industry. So for us, it made sense to expand our always there community project focus to include, especially even if we weren't located in them, the communities that have been most hardest hit by the war on drugs. So that's the focus of SEED. It does include a lot of expungement fairs that we run with, that we get all of the law firms that we work with to contribute pro bono hours to, all of our third parties that we contract with. If they want to continue doing work with Cresco Labs, they have to contribute back to the initiatives that mean something to us. So free hours, as we've developed an incubation program for social equity applicants that are going to be part of this upcoming application process in Illinois. Their legal fees are covered by literally Jenner & Block and Winston & Strong and some of the biggest law firms in the world, Denton's, providing free legal work to the social equity applicants that are applying for these licenses. It's a wonderful way to give back to the program and to make sure that this program develops in a way that is responsible and respected. Because if you have a responsible, respected marketplace, it will be bigger than one where people don't want to participate in it, where customers have an adversarial relationship with the law that got passed or the marketplace that gets developed. So very important. And then I'll go into these real quick. The pending transactions, Trike, as you saw today, no second review from the DOJ. I can't express how important that is for the industry. And again, this is where the regulatory and compliance focus of Cresco Labs, I said it before when we went through the second review for the first time with Origin House. I said, this is a blessing in disguise. This is a silver lining here of we have the opportunity to be the face of the cannabis industry in the eyes of the Department of Justice. That is an incredible opportunity that a second review from the DOJ gave us. And I think the proof has shown that it was a good thing for Cresco Labs to be in that spot, because the second time that we have a transaction that goes in front of the DOJ, they're good with it on first review. So if that's an indication of how they now think about the industry and how future M&A will go in this space, very important. Origin House, as we announced a couple of weeks ago, we're working on final terms that'll be agreeable to both parties to get that deal done. And then, of course, this is what any company should be focusing on going forward. I'm sure that I'm over time here. So top line growth, margin expansion, and a responsible steward of capital is what you guys should expect from organizations in this space. I think the WeWork era is over. You want fundamentals, you want corporate governance, you want balance sheets that make sense. Times can get tough, capital markets can dry up. You need to make sure that you are at or near cash flow positive in a hypergrowth industry, which is counterintuitive to the way that a lot of people think about hypergrowth industries, but you never know what could happen. I know that Cresco Labs will be standing here going forward. I don't know if I could say that for all of my peers. So with that, thank you guys very much. Open it up to a couple questions in the back.
We do have one question from the virtual platform. How are the California fires influencing your purchase of Origin House? Are there cultivation centers in Sonoma County threatened?
No, I could tell you that the fires are not impacting our purchase of Origin House. The back.
Thanks, Charlie.
No, great question. I know that other states are looking at it because, again, I have the conversations with the legislators in the other states. Again, another reason why I would say make sure that the companies that you think are investable are focused on social equity, because the one thing I can tell you is that Illinois is now being held up as a model on how you can get an acceptable, responsible, and appropriate adult use law passed. And I'm in the room also sharing my opinion with the legislators in those new states. I'm going to make sure that there's a social equity focus in future legislation that takes place in other states. That'll be a priority of mine as I'm having these conversations with those legislators. So great question.
I'm sorry to leap in. I'm sure there's lots of good questions to come, but we are out of time. There is going to be time at the cocktail reception to mingle and ask plenty of questions. So thank you, Charlie.
Thank you very much.
So next up, we have Hadley Ford, CEO of Ianthus. Welcome, Hadley.
Thank you very much. So I guess as the last presenter, the question is, do you want to talk cannabis or should you just go have some alcohol? Like one of the two. See, press right. There we are. So I always have to start with the disclaimer. I'm going to say many things with great confidence, but I have no better chance of predicting the future than anyone in the room, especially in today's market. So Ianthus is a vertically integrated multi-state operator in the United States. We have operations in 11 states, currently generating revenue in 9 of those. We are cash flow positive in most of our key markets, and we're building out capacity to be able to sell $500 million of product in the near future. And we're able to open 68 dispensaries where our customers can learn about our many brands. We recently announced a transaction with Gotham Green, and our ability to build out all of our markets across all of our footprints now certain. For those of you who don't know, Gotham Green is one of the preeminent investors in the cannabis sector. They've been investors in all part of the value chain, including brands, operators, and technologies, both in Canada and the United States. And they have a very deep knowledge of what are the key drivers to long-term value and competitive positioning. And they've been a meaningful partner of ours for a couple of years. They invested $50 million in us about a year and a half, year and 3 quarters ago. The financing plan is up to $100 million. The first closing was $20 million. We should close another $80 million in the next month or so. And the full $100 million in the plan will allow us to build out everything we have on the plate, all OpEx, CapEx, and maintain a good cash balance while we're doing that. It will allow us to become positive EBITDA in the second or third quarter of next year, and operating cash flow generative in the third or fourth quarter next year. And that's a very powerful position to be in the current financing markets, to have access to that type of capital to ensure you can pursue your plan. In the cannabis space in the United States today, you have a choice. You have a license in a state, and you can choose to be a farmer, you can be a retailer, or you can be a purveyor of branded goods. Given how those different business models trade in the equity markets, we would rather be a purveyor of branded goods. The question is, how do you develop yourself into that? And because you can't have a contract manufacturer give it to a drop shipper and put product all across the United States, you actually are relegated to a 1936 business model, which just means your only relationship with a customer is going to be through a retail presence. So the first thing is you have to have big, beautiful stores in well-located cities that matter, and you have to delight your customer when they come into that store. The second piece is that customer is going to buy something. Hopefully it's a product that you've built and you've named, and they buy that product, and over time, 12, 18, 24 months, they begin to not be able to live without that. That's how you create that brand piece. Then you take that brand, that product, and you distribute it through a wholesale model in whatever is allowed the state you're in. Other retailers, online, delivery, and try and have as much breadth as you can so that you have a portfolio of brands that people can't live without. To actually make that work, there's a second component which is unique to cannabis. You can't make everything in Oklahoma and ship it. You have to make your product in every single state, which means if you're going to have a vape or a chocolate that people say, oh, I recognize that brand, the experience, the look, the taste, the feel, the packaging has to be very, very similar. You're never going to get it exact because trying to make something the same in 11 different states is a non-trivial exercise. But you have to have an ability to replicate your operations. You have to have a team that does that. You have to have processes and infrastructure in place to make that happen. And that all hinges on the last piece, the most important piece. You have to have a management team that can pull all these things together. So how are we doing by the numbers to date on this, this strategy? Currently, we have 27 stores open. We have the ability to open 68. We have THC and CBD brands that customers ask for by name. Including our stores, we have THC brands carried in more than 170 stores in the United States. And we have CBD brands that are now carried in over 1,100 stores in all 50 states. We have 700 employees dedicated to creating wealth for our 60,000 shareholders. And this is just the beginning. We had, say, $100 million of annualized revenue in second quarter reported. We're run rating well ahead of that now. But we're talking about billions of dollars of revenue opportunity for companies like ours in the not too distant future. And you need to get those basics right today to be able to have an ability to generate that type of revenue. One of the key building blocks to that success going forward is being in enough of the right markets on a national scale. Why does this matter? Because if you want to build that brand continuity, that national brand, you need to be in places that matter. You need to start to create that. The New Yorks, New Jerseys, Floridas, Vegas, LA. You need to be in those types of markets to be able to drive that type of acceptance and awareness. Currently, we have presence in 11 THC states. We have a reach into with our CBD brands in all 50 states. We're competing for $10 billion in estimated legal sales of THC and $2 billion of CBD product competition in 2019. And we have a successful track record from an M&A perspective of building out that footprint. We've also won applications in New Mexico, Vermont, Massachusetts, recently in Nevada and New Jersey, and acquired properties in Arizona, Maryland, New York, and Florida. And with the recent acquisition of CBD for Life, we now have a new channel relationship with retailers like Urban Outfitters and Dillard's, other well-known national retailers across the country. These types of relationships allow us to have conversations on marketing and advertising and distribution and brand support that we would never be able to have if we were only in the THC business. And hopefully we'll have some very nice announcements later this year around those brand partnerships that you can do in the CBD space. Our recently announced acquisition of Sierra Wealth, it's squarely in the wheelhouse of what we look for in M&A. We added a great, well-reviewed, market-leading stores in Reno and Carson City, from which we can educate our customers and build brand awareness around our products in Nevada. We picked up extra production and the ability to build another 50,000 square feet in the state. And we got a great price, we got a great team, And in this day and age, very positive. The business is cash flow positive and earnings positive, so you can actually pay a PE multiple for this business. The ability to grow through acquisition has allowed us to build out a very robust distribution network for our brands. We start in our own stores. That's the initial stage of education with any consumer. Then we leverage a wholesale model, carrying our brands into additional third-party cannabis retailers and 1,100 other retail partners across the United States. One of the questions I always get is, gee, Hadley, if one of the key steps is to delight your retail customer, how can you do that in 6 different retail brand names? You know, Grow Healthy, Organics, Health for Life. And you're right, we can't do that. So that's why we're renaming all of our stores Be the Cannabis Store. Have one look, one feel, one experience. Our stores will deliver an environment where customers will have an experience of education and acceptance. They'll be able to learn about and purchase cannabis. They'll build on the pioneering, award-winning retail experience that Beth Scavolo and her team created at the Health for Life stores. We'll provide knowledge and trust in a selection of our brands and other products dedicated to serving the needs of our patients in a very welcoming environment. Our first B store will be opening this winter in Brooklyn, right across from the Barclays Center. We already have a medical store there named Sativa. Rented a space 2 doors down. We're building that out, going through all the wonderful real estate build-out things that we New Yorkers are so familiar with. The creation of any of our product brands starts in our stores. Our stores are large and inviting, located in high traffic locations that matter. So stores like Boston, Brooklyn, Phoenix, on major traffic intersections, and soon in Atlantic City, where there are 24 million visitors a year, on the Strip in Vegas with 42 million visitors a year. And we're in Florida. We're open in 9 cities, including Miami, West Palm, Daytona, and recently Orlando, with over 72 million visitors a year. We're already using this retail presence in many of these markets to gain mind share and our shelf space with brands. If you look at Arizona, we're on 30% of the shelves there in the state. Massachusetts, 27%, 40% in Nevada, and over 70% of the stores in Maryland carry our MPX products. And when customers go into the stores, they'll see our brands like CBD for Life, MPX, and Mayflower, which is the brand we do business with in Massachusetts. They also see our brands that we've partnered with to ensure our own retail customers have a robust number of products to choose from. We found that customers come in, they don't want to just see your stuff, they want to see a wider range of SKUs, have a chance to experiment, a chance to try other product sets. Our team knows how to do this. We've shown proven leadership in retail and product branding. We've won awards for our extracts and vapes and products across the United States. One of the questions that comes up, though, is can't really have a brand if a customer walks into your store and the shelf is empty. And this is an endemic problem in cannabis. It doesn't really get written about much, talked about much. But keeping a popular product on the shelf, whether it's from a production perspective or a retail inventory perspective, that's tough. And that's a bad day if your customer comes through and the product isn't there. So one of the key things we're doing in 2019 and through the balance of 2020 is ramping up our production capacity. Currently, right now, we sell everything we make in every state. So that's a pretty easy, simple thing. What am I going to do with all that money we just got from Gotham Green? We're going to expand production. We're going to build that out so that we have at least $500 million of retail sales available from that production by the end of next year. We're doubling capacity in Mass, doubling capacity in Maryland, adding over 100,000 square feet of growth capacity in Florida. In Massachusetts, we've doubled our average daily sales this year. We are just approved for adult use in Worcester, and our retail and wholesale revenues continue to be up month over month. Our flower brand is now carried in close to 30% of the stores in that state, and our monthly revenue is well over $1 million. Actually, it's well over $1 million. We actually just generated $1 million of cash out of that state last month. We're spending some of the capital raised from the recent Gotham financing to begin growing in our second mass production facility, which is located in Fall River, where we're adding an additional 40,000 square feet of capacity. And we'll also be able to use non-CO2 production. We'll be able to use, we're constrained to that in our current grow in Mass. We'll be able to use some of our new production facilities in Fall River to create MPX concentrates. In Maryland, monthly revenue is up 150% since January. MPX concentrates in 70% of the stores and revenues of over $1 million per month. And we're also cash flow positive in that state. Part of the cash we're raising from Gotham will be used to increase production in the state of Maryland. In Florida, from a standing start in January, basically when our first store opened up, we're now run rating close to $1.5 million a month. We've taken market share in the 9 markets that we've opened. And we currently have over 3%, actually close to 4% market share in the state. And we're currently ranked number 4 in grams of THC sold per store. The biggest issue we have in Florida is we harvest flower, we put it in the store, then it's gone in 48 hours. So our biggest piece is build out that capacity. So every available dollar we have is going into the ground, going into indoor grow and outdoor grow to have more supply available in the marketplace. In Nevada, or in the Southwest, we're in 40% of the stores in Nevada with MPX concentrates, so we can barely keep up with demand there. We've run through all of our inventory, and as fast as we can make the concentrates, they fly off the shelves. I think of the top 10 concentrates in the state, ours are ranked 1 through 5. So very well received. They command a price premium and are frequently asked for by name. So part of the capital we're raising will be to expand, actually double the capacity in Nevada as well. In Arizona, which is our most mature market, we see that as a fairly good indicator for what we can expect longer term in other markets. Our retail stores continue to grow month over month with average store revenue of over $6 million per store. Our MPX products carried on the shelves of 40 other retailers. In advance of the recreational ballot, which should be up in 2020, we'll actually begin to build out more CapEx to have more supply there as well. These existing markets should drive strong sequential growth for the overall company quarter over quarter through 2020. And as we invest further in New Jersey and New York State, as those states move toward full recreational with the potential for over a $6 billion tri-state market, those operations will supercharge our growth moving into 2021. We're currently opening our B store this winter, and we should have plants in the ground in New Jersey by December. But all this is great, but nothing actually happens unless somebody makes it happen. We have over 700 employees with tremendous experience in the key elements of what it takes to be successful in the cannabis industry. In cannabis specifically, we have team members with scores of cannabis cups under their belts. In retail, Beth and her team pioneered their award-winning retail concepts in Arizona and Maryland. For brand building, our CMO, Neil Calvespert, actually slept in a van as he developed the Quicksilver distribution model in Europe and sold that business on his 21st birthday with over $30 million in revenue. More recently, he was the CMO at Monster Energy, where he took sales from $1 billion to $3 billion in a 4-year period, drove their stock up 4x. On the operational side, Pat Tiernan is our COO. He took Stone Brewery, which is a little-known Southern California brewery, into 50 countries and made that company one of the top 5 craft brewers on the planet. The beer had to be the same in every single location. Different product set, but the cannabis needs to be the same in every location as well. So those processes, that team, the way you approach that problem set is very similar. Our M&A team has a proven ability to add footprint and, even more importantly, to actually successfully integrate those acquisitions. Very easy to announce a deal, very easy to give someone some stock or some cash. It's another thing to bring those antiquated systems that exist in cannabis together and clean up all the books, records, HR, all those mundane things, accounting systems. That's a lot of time and effort, and we've got a team that does it, and we've done it 15 times to date. And we're built to be public. As we watch some of the shenanigans at WeWorks over the last couple of months, it gives me great solace that we've had a program in place for a long time to change our share ownership and our governance. You may have noticed earlier this year we moved to a single class of stock. I've got the same stock that you do. Everyone gets a vote. You guys can vote me out if you want. From a governance perspective, we proactively went to a fully independent board. December 5th, that board will be seated. I no longer control that board. Every committee filled with independents. Comp, nominating, governance, audit, all independent. We think that's the right way to comport yourself in a public environment, especially in cannabis with the opaqueness and some of the craziness that goes on. You have to actually run a good company, but you also have to run a good stock. We have the largest float, the most research coverage, the best liquidity as a percentage of market cap. We're aligned with you, the shareholder. We wake up every day with one focus: to work for our public shareholders. Can't emphasize this enough. I've been an entrepreneur for most of my career. It's your money. It's not my money. I don't own 51% of this thing. It's not my company. It's your company. And you have to wake up with that attitude, and you have to act in that manner. And I think that's going to create great dividends, not just for us as a company, but for you as shareholders over the next 24, 36, 5 years. So why do we do all this? Because this isn't a once-in-a-lifetime opportunity. This is really a once-ever opportunity. And people often say to me, hey, this is a lot like when the alcohol business went from bad guys to good guys with the end of Prohibition. But it didn't. What happened at the end of Prohibition? The Kennedys went from being criminals to being like President of the United States. The Bronfmans went from being criminals to being lauded as some of the richest and most powerful people on the planet. In cannabis, El Chapo's in prison over in Brooklyn. And normal people like myself, my team members, my peers, have an opportunity to create an industry that's unprecedented. And you look at some of the numbers. Cannabis today, probably 11 or 12% adult usage across the United States. FBI estimates are $55 billion changes hands between the legal and illegal market. If that's a branded product, that's probably a $250 billion market opportunity. Our supposition is that in 10 years, cannabis will look a lot more like the alcoholic beverage industry. You'll have close to 50% penetration of the adult population on a regular usage. That means the revenue opportunity in cannabis could be close to $250 billion. That's all going to be a branded sale. That's over $1 trillion of market cap. $1 trillion. You can take any discount rate you want and bring that $1 trillion back to today. And every company you saw today, including us, is wildly undervalued. We're more undervalued, but everyone's undervalued. So how do you make this happen? You got to build a retail footprint. You have to delight that retail customer. You have to innovate and create products and brands that customers must have. You have to distribute those, and you have to be able to drive growth through scalable, replicable operations. So coming back to the valuation piece, if you look at a basket of all of our peers, we're in similar states, similar number of dispensaries that can be open, similar amounts of revenue. The only place that there's a huge discrepancies in the valuation, if you just go back to the last quarter, take the reported revenue, multiply it by 4, put that in the denominator, put your market cap up there in the numerator. We're trading at, what does this say up here? I guess we don't have it up there anymore. We're trading at 25% of where they are, 75% discount on a multiple basis. So we are Ianthus, IAN on the CSE, ITHUF on the OTC. Thank you, OTC, for hosting today. And we are undervalued on both. So now I will be happy to, thank you for that. I'll be here till Tuesday, try to roast beef. I will be here to answer questions. I think there's one that comes over the mic first, or, okay, so.
Yeah, we do have a question from our online audience.
Okay.
Can you share your thoughts on the timeline for the U.S. safe banking legislation and what impact would be on your business?
Absolutely. So I'm going to throw my partner, Randy, who's not here, under the bus on this, because I'm just going to quote him. And then if it's wrong, I'll just say that was his idea. He's quite confident that we should have the SAFE Act passed before Christmas.
Wow.
Now, that sounds fairly aggressive, but here's his mindset and thought on that. And in full disclosure, I used to be a regional bank analyst at Fidelity back in the 80s. So the SAFE Act came through the House. What typically happens when a bill comes through the House? It's loaded with sort of pet projects that have been stapled to it and this, that, and the other thing, and you have to argue and remove things. That came through whistle clean. Why did it come through whistle clean? Well, our supposition is that the banks want it. The American Banker Association is supportive of it, KeyBank is supportive of it, Wells Fargo is supportive of it. So you got a lot of big banks what do banks do? They support politicians and support PACs and whatnot. So I think the word is in, hey, this is something that's going to be very beneficial to the banking industry. We want to be in on this. We want to have access to those $55 billion of checking accounts so we can have cheap assets that we can then lend back out again. And I think the same thing is going to happen in the Senate. The head of the Senate Banking Committee is not a big fan of cannabis. And yet, if you listen to what he's saying, he seems very supportive of getting a bill passed. We think this has a lot to do with the bank industry lobbying efforts, and we think that it can actually get done before Christmas. The impact on our business will be, well, I guess there's a couple levels. The first piece is, if you open up a checking account as an individual, you get a toaster. If you open up a checking account as a cannabis company, not only do you have to pay $5,000 a month, but you got to give them a toaster, a microwave, and a color TV. Very expensive to do banking. I think the more impactful piece, besides getting rid of that sand in the gears, is banks may actually start to lend. Right? You have working capital or inventory you need to finance. Right now it's with equity dollars, and given where the stock prices are, that's a very expensive proposition. If you have access to bank debt, even if it's priced at 8, 9, 10%, so much cheaper than equity. So I think the passage of the SAFE Act will be tremendous for the industry. You can start to get debt in your capital structure, and obviously that brings down your overall cost of capital and should drive up the stock prices quite a bit. That answer your question?
Ooh, it's coming.
I hope so. I was hoping there'd be silence because you're out buying the stock. Yes, sir.
With the vaping scare, considering MPX is such a big part of the business, has it affected your sales and bottom line? And do you expect it to do so in the next 3 to 6 months?
I guess first I'd say in the vaping scare, I'm long-term bullish on vaping. I think it's a safe and effective method of consuming cannabis. I think it needs to be regulated, tested, and ensure the government needs to do what it does, which is protect its citizens. You need to have standards. You need to legalize cannabis on a federal basis, get the FDA involved, get these devices approved, and I think it's a good way and a safe way to consume cannabis. And the sort of short to medium term, I think you're going to have dislocation. We've actually seen an increase in vape sales in Florida. I don't know if that's because people are stockpiling or whatnot. We've seen a tremendous fall off in New Mexico on vaping. The rest of the markets, kind of staggered this way. And all right, I was on the phone today with a vape company in California. Their sales are off 30%. So it has had a near-term impact. It hasn't had much of an impact on us. MPX actually doesn't have a lot of vape. It's more of the concentrates, dabs, shatters, crumbles, things like that. We got a live resin cart we just launched. It's not a big percentage of our revenue. The place that has hit us was in Massachusetts because we had wholesale trim. We were selling into a couple of companies that were making vape carts. So they canceled their orders, but now we're seeing, 3-4 weeks later, we're back to normal volume as people are, we think, buying trim to make tinctures with and syringes. There's been a big run on syringes we've heard through the packaging company. So it's not as if people are going to stop consuming cannabis. I think vaping is a very accessible way, it's a very popular way, but people aren't going to suddenly say, oh, I'm out of the cannabis market. It's just a matter of where it's going to shift to. Yes, sir. You like him better? Should I go back there? Oh, okay. I'll repeat the question.
Great. First of all, good job with the corporate governance stuff. That's really great to see, and probably on the forefront. So great stuff. Question about the cap stack that you started to go over in the beginning. I was trying to take some notes. You've taken down the first tranche, the $20 million. If my notes were right, 13% coupon, $1.89 convert, and then warrant coverage at 197.
That's right.
For 5 million shares.
Yes.
Okay. And the next tranche, I think you said you were going to take down the next 80 million.
Pricing.
Same pricing. Okay. So that's already locked in. It doesn't matter what the market does between here and there. Okay. And when do you plan on taking down the 80? And will you definitely take down the 80?
Because of some obscure affiliate rules in Canada, we have to take it down in 2 tranches. So we'll probably take the first tranche down next week after, and then we have to wait and take the next tranche down. And the affiliate rules are Gotham owns on a fully, probably more information than you want, but the affiliate rules in Canada are such that if you own over a certain percentage, when you're doing financing, you then have to seek a shareholder vote, which seems ludicrous. And I think most shareholders would be very happy to have the capital. So you have to tranche it. So you do tranche 1, you wait, you do tranche 2, and that's what we'll do. Oh, that's a great question. Gotham has never sold a share of our stock. They're considered an insider. I talk with them 3 times a week. I was on with Jason last night. They've got, they have access to what a prudent investor would consider material non-public information. So even if they were in the market, which isn't their business model, they would be precluded from selling shares. And they've never sold a single share of ours. Oh, you're welcome. Yes, sir.
Last question.
Last question. Make it a good one.
We'll see.
It's the pressure.
You mentioned being undervalued relative to everybody else, or everybody else you had on the screen.
Yeah.
Have some thoughts as to why that might be?
Yes. So, and part of it's self-inflicted. When we started our company, we were a pioneer in this. We took our company public 3.5 years ago. And when I say we took it public, no one would work with us. It's a little bit like you want a car, you have to go build it yourself. So my background was banking. My partner's background was legal. We drafted all our own documents. Sat down with the head of the CSE and said, hey, what do you think about listing a cannabis company? Said, yeah, I could do that for you. We drafted our own listing documents. We did everything ourselves, took ourselves public. All we had was a minority investment in New Mexico, a minority investment in Vermont. The original model was to kind of be a publicly traded PE shop. And it then morphed to owning 100% of these operations across the United States. So we positioned ourselves originally not as operators, but as savvy deal guys who could know our way around the capital markets, know our way around M&A. And then we bought a bunch of things, but we bought a bunch of greenfield licenses. We bought a license in New York. We bought a license in Florida. We bought out our minority partners in Massachusetts. We didn't have any revenues or operations we could talk about. So everyone, you guys would know better than I, said, oh, the guy Hadley, pretty sharp Wall Street guy, but he's never run anything before. So I think we get dinged on the operating side. What people forget, before I did this, yeah, I did Wall Street, but I did Wall Street 20 years ago. I ran a healthcare company for 10 years in between there. And I think what people want to see is, do they know how to operate? Can they get an ERP system in place? Can they show, sequential growth quarter after quarter? Can they show that they can pay attention to expenses? Can they see gross margin expansion? Do they have a roadmap and path that they can tell cogently to get to cash flow break even in 2020? I think people see that quarter after quarter. I think the market, for better or for worse, is now focused on that. I think originally they're focused on, hey, do you have a license? How big is your footprint? How many dispensaries are you opening? Do you have revenue? World's changed. You better be focused on cash. You better be focused on margin. It's actually what I did for 10 years, running the world's largest proton therapy company. What my COO did, running the 5th largest craft beer company on the planet. It's what my CMO did, is CMO of a $25 billion market cap company. We've run real things, and I think that's the rap that's been against us. We accept the challenge. 2020, I think we'll educate the market that we know how to run things as well as do deals and raise money. That answer the question? All right. Well, thank you very much. I appreciate all your time, interest, and support, and I look forward to having you all as shareholders.
Thank you, Hadley. I want to thank also the 600 listeners on the Virtual Investor Conference. I hope you guys all enjoyed the event. Cocktails are now being served.
All right, guys. Thank you guys for watching. Thank you guys for joining me. This has been a long day. We did learn about quite a few companies, which I'm excited about. Let's break it down. So it's been a long day, and we've been streaming for literally hours. So they started off by talking about the Canadian Securities and Exchange Commission. Then we heard from Kim Rivers, the Chief Executive Officer of TruLeave. I guess that's over. Let me just large screen this. Okay, so first we heard from True Leaf Cannabis Corporation, TCNNF in America, TRUL in Canada, Kim Rivers, Chief Executive Officer. Then we heard from Flower One Holdings, FLOOF, FONE, Keelan O'Keefe, Chief Strategy Officer. Then we heard about AYR Strategies Inc., AYRSF in America, AYR in Canada, Chief Operating Officer Jennifer Drake. Then we heard from TerrAscend Corp., TRSSF in America, TER in Canada. Then we heard about Planet 13 Holdings, which I was very impressed with. PLNHF in America, PLTH in Canada, Bob Groesbeck, Chief Executive Officer. Then we heard from Cresco Labs, CRLBF in America, CL in Canada, Charlie Bachtell, Chief Executive Officer. And lastly, we just heard from Ianthus Capital Holdings. I was also very impressed. Hadley Ford, Chief Executive Officer, IAN in Canada, ITHUF in America. Thank you for watching. This is your boy Rich from Rich TV Live. If you're not winning, you're not watching. Thank you for joining me today. Thank you for being here today. I really appreciate you guys. I give all the glory to Mark Pepper, one of our members. He's constantly sending me information. He sent me this link today. He said, Rich, you're going to like this. He was 100% correct. Absolutely loved it. It was a wealth of information. I'm very interested now in buying some Planet 13. True Leaf is something I've been wanting anyways, but I want it even more. So True Leaf, Planet 13, Cresco Labs, and Ianthus are 4 out of the 7 that I really want. I don't have in my portfolio right now, but I'm very interested in picking up. I'm going to date them for a bit. I'm going to watch them. I think we're really close to the bottom in the cannabis sector, everyone. I really do, and I think they're going to shoot up soon. So stay tuned. This is your boy Rich from Rich TV Live. If you're not winning, you're not watching. We bring you all the best information, news, stock market education from the world of the stock market, but specifically today, the cannabis sector, which has been getting destroyed for months. But could we soon see a reversal? Could the trend reverse? There's a few catalysts like edibles, legalization in Canada, which won't really take place until mid-December, early next year. And in addition to that, another big catalyst is the Safe Banking Act, which the Ianthus CEO, Hadley Ford, just predicted could be passed in America by Christmas, which could be a huge catalyst. So stay tuned to that. Legalization of cannabis in America, plus all of these companies' revenues, which just keep growing and getting bigger and better every single quarter for the most part across the sector. So hopefully this trend continues. This is Rich from Rich TV Live. We've been streaming for hours. Thank you for joining us. Thank you for being here. Mark Pepper, you are a scholar, my friend. That's what makes the Rich TV Live community so powerful, so special, and so great. The people have a voice. If there's any big news, anything that's trending, any conferences happening, let me know. And if I have a chance to stream it, I'll stream it live. It's your boy Rich from Rich TV Live, and I'm out. Peace. Thanks for watching, guys.